Good morning, everyone. This is Sheldon Powell, CEO and founder at Caribbean Institute of Traders. I'd like to thank you guys for tuning in to watch this live online demonstration. I'm going to go ahead, guys, and place my trades and then explain after. We're going to go bullish, gold and silver, right? And here at CIT, when we're going to go in the market bullish, that means we're buying, okay? Right. So we're going to go ahead and buy gold live. Perfect. We're going to also go ahead and buy silver. I'm going to explain the technical and the fundamental reason why we went in the market bullish, okay? First of all, let's touch the fundamental aspect. Manufacturing index came out 4 minutes ago, showed that manufacturing index declined in the United States, which should put pressure on the US dollar. Now we're traded gold versus the US. Let's get right into the presentation, guys. What you're looking at is called a trend line or trend lines. As you could see, based on my previous demonstrations, this is an upward trend line, okay? We draw it from the bottom of the candles. Everything is explained in our course. So you draw the trend line from the bottom of the candles or from the bottom of the trend to have an idea where it's going. This is a bull's market. Then the market turned bearish, went bullish, turned bearish, and break our trend line right around November. So since November, gold declined, rallied, declined, rallied, and right now it's on a trend line here, which we bought to go higher. Okay? Now, we placed the trade just now. We're up 28, roughly 37 US dollar on this trade. I'm going to go ahead and put in my stop loss along with my profit take. Okay? But let me just finish with the analysis. So we went in bullish gold, right? Even though gold came down here, we're half an hour, guys, in Wall Street, okay? Wall Street now open. So before that, unemployment claims for the US economy was good. So gold declined. However, it did not break the trend line. Why? Because we expect a bear candle. What is a bear candle? A bear candle is a candle looking like this. A red candle that is heading down. Everything is explained in our course. So since the market did not form a bear candle below the trend line, number one. Number two, Wall Street opened 9:30. So we're half an hour in Wall Street trading. And another fundamental announcement came out for the US economy, which was negative, which means, guys, it will boost the price of gold. So we went in bullish. Okay? So we bought gold at 1,675 US dollar an ounce. Right now we're up 83 US dollar live as we speak. Now we're going to go ahead now and put in our stop loss. Based on our equity management at CTI, when you're trading gold, you must always risk a $5 stop loss. So if we bought the market at 1675, we expect to come out the market with a loss if the trade go against us at 1670. Now for our profit, we're going to come out at 1700. Okay? Good. So the market was here earlier. Now it's here, which means it rallied over time. So we bought. We're looking to come out at 1699, roughly 1700. We're up 126 US dollar during the presentation. Let's go to silver. Silver, guys. Silver is a little bit different than gold in terms of the technicals. Let me show you. Since the 29th of June, okay, since the 29th of June 2012, silver has been given reversal pattern to go higher, which it did. So silver was at a low, guys, from last year June. Silver was at $26.48. Okay, $26.48. It rallied from June to August, then September, silver declined. It rallied in November, declined in December. Now we're in January, guys, okay? We're in January, so it decline, rally. Decline, we expect silver to rally, guys. That's the reason why we went in bullish, or that's the reason why we bought silver. Right now, we're up 183 US dollar live as we speak. Now I'm going to go ahead and put in my stop loss for silver. Okay, so I bought silver at $31.34. My stop loss will be at $31 flat. Okay, with our equity management in our course, you must always risk 35 to 40 cents on silver and always go for double the amount. So we're looking to come out the market at 32.45. Grant you, we're currently up 236 US dollar right now. So we could come out the trade if we like. Oh my, wow, we're up 400 US dollar, guys, as we speak. 400 US dollar, guys, currently in the market. Look at that. Wow, magnificent. We're looking to come out the trade at 32.50, 32.45. Let me go ahead now and draw another trend line here as a gauge. Okay, so this is the first trend line. This is the second trend line, guys. Wow, 500 US dollar, guys. Now we expect gold, silver to come to 32.55. Then we're out the trade. But for now, we're letting the trade run. That's the technicals. The reason why we went in bullish is because, one, non-farm labor data came out first at 8:30, and it was good for the US dollar. Because it was good, gold and silver declined. Now, 10 o'clock a.m., which is 11 a.m. Trinidad time, Philly Fed Manufacturing Index, which is manufacturing data that show you how the U.S. economy performed for that month. So guys, let me show you this. Everything is explained in our course, right? You have the actual, the forecast, and the previous. The previous was 8.1, so they forecasted to be 7.1, which is here or there, not that bad. However, it came out negative 5.8, which means manufacturing index decline. So this has a lot to do with people being employed, number one, demand and supply of a particular good. So right now, we're going to turn to the news to see if Bloomberg or Reuters published this as yet. I know they should. That's tremendous, guys. Wow. Okay, we're at 421 US dollar, 433. It's fluctuating here, there. All right. I mean, this market is going to go. This is a perfect example of a reversal trade. Gold. Yes, gold definitely going to take off, guys. Gold definitely going to rally. That is it. Gold is going to rally. There's no if or about. There's no question about that. Look on gold. Wow. Gold came down, touched the backside of the trend line. Gold coming to 1700. We're holding this trade. Okay. We deposited 3,000 US dollar in the account. It's now reading 3,293. However, we placed some trades earlier in the month, and due to the methodology we use, the market go up and down. So it's not every single trade will be a winner, but over a long term, you will be a winner. So we were negative on the account at a point, and based on following the methodology, guys, we're able to get back in the game, which is our profit, and secure back our initial investment. So let's come over here. Okay. We have an article here from Bloomberg. Some time to load. Okay, wow. So we're up 429 US dollar on our initial investment, guys. Currently, we're at 537 US dollar. In our course, one of the best time to trade is after Wall Street open. In other words, you don't need to be on Wall Street in order to be a Wall Street trader. Just like what we mentioned in our presentation, guys. We bring Wall Street to you. So right now, the euro is rallying. The Swiss franc is basically here or there. Gold, definitely going to take off. Silver, yes, silver will continue, go higher. S&P 500, right? S&P take out the high, guys. S&P, the high was 1467, okay? 1,467 points. However, the market is currently at 1,474 points, which means the stock market index bullish. Let's look on Dow Jones. Same thing with Dow Jones. Currently bullish, guys. So since November, okay, since November, S&P has been appreciating in value. All right? Investors' sentiment bullish. So now we expect S&P to come to 1358. And currently it's at 1351. So it has 8 more points to go. All right? So since S&P, Dow Jones, Euro rallying, that simply means that silver and gold are also going to continue. Because on the spot market, guys, they're considered risky assets. And right now, with the US economy, based on the manufacturing index data, came out negative for the US, that simply tell us, the trader, that listen, go in the market bullish. So we're trading against the US dollar. Okay, I'm pulling up the technicals, the fundamentals here on Bloomberg, and then I'll explain it. We let the market fulfill the trades, and as I said before, every trade you could view at track records on our website. manufacturing in the Philadelphia region unexpectedly shrinks. So this is not good at all, guys. This is negative news for the US dollar. So anything or any currency right now traded against the US will appreciate, because this came out 18 minutes now and we're still up. Let me see. We're still up 436 US dollar on the trade. I placed the trade right at the beginning of the presentation. So let's say some of you guys were in our course. You could automatically right now, guys, close the trade. All you have to do is come here where you see your open positions. You highlight which one you want to close. You right click. You close. You're up 220 US dollar on silver. So you have the option, guys, to close out silver right now and lock in 220 US, or you could do the same for gold and lock in 195 US. So in total, 426 US dollar within that trading time frame. This is a part of our online class for our students where we trade live on Wall Street, opening bell. So anybody could participate in the live trade. Okay, guys, what we're going to do, we're going to post the article on our website along with the trading video so you guys are able to view it. So have an idea what we're trying to accomplish. Manufacturing data unexpectedly fell for Philadelphia index, right? Now, we went in gold, we went in silver. We're going to let the trade fulfill itself, but for now, we're protected. We bought gold at 16. Write this down, guys. Write this down. We bought gold at 1675.78. Currently, it is at 1685.55. So gold basically rallied in our favor $10. Okay, that's not too bad because we're coming out at 1700. So we're just going to leave the market, let the trade fulfill itself, and we're going to take it from there. Whenever we close the trade, we're going to calculate our initial investment, which is $3,000, with our equity to get our percentage, as in return on investment for the month of January. Everything will be posted live on our website. In our next trading video, we'll explain in detail about our course, what we have to offer for traders living in the Caribbean, and anybody who wants to pursue trading to supplement their income. On behalf of Caribbean Institute of Traders, I'd like to thank you guys for tuning in to our live online demonstration. Have a good day.